Please join me in welcoming our first panel of the day, moderated by Nick from London Business School. And the panelists are Erica from Anthemis Group, Charlene from BitPesa, and Chris from Secco Bank. Without further ado, Nick, take the floor.
So I'm going to start off just by asking our panelists just to give a quick introduction to themselves. So we'll start with Erica.
Hi, my name is, is my mic on, I'm assuming. Hi, my name is Erica Young. I'm from Anthemis Group, which is a venture investment and advisory firm. I've been with them for about 4 months now. Prior to that, I was the chief product officer for Insight Robotics, was a robotics company based in Hong Kong. And I actually had been there for the last 8 years working with startups to commercialize technologies, develop R&D teams, and address mostly emerging market opportunities.
Hi everyone, I'm Charlene Chen. I serve as the Chief Operating Officer of a Pan-African company called BitPesa, and we leverage digital currencies such as Bitcoin to significantly lower the cost of money transfers to and from sub-Saharan Africa. Prior to working at BitPesa, I worked in the social entrepreneurship space in East Africa for a company called Kickstart. And prior to that, I got my MBA at UC Berkeley at Haas. And prior to that, I was working at Deloitte Consulting. So just to show you, you can evolve from consulting.
And hi there, I'm Chris Gledhill. I'm CEO and co-founder of Secco, which is fashionably known as a challenger bank in the UK. So we are basically starting a new bank. We're quite early in the journey. We're creating a bank that's slightly different from what you might consider a bank to be. We're creating a bank where you can deposit your data as well as your money. So you can deposit your data, lend your data, spend your data, and invest your data, and earn interest on your data. So we're trying to create a bank with a bit of a difference. Before that, I was lead of Disruptive Innovation Labs at Lloyds Banking Group. And before that, I was at Accenture for a number of years, so also consulting background.
So there's hope for everyone.
And I ended up in consulting. What does that mean? I don't know.
We're all confused, I think. So, Chris, I'll start with you. So one of the main barriers to a globally connected financial system is a lack of trust. How can technology enable consumers without traditional trust tools such as credit scores and easily verifiable online identities to participate in the global economy?
I reckon it's probably taken a new look at what trust is, or actually looking at how we do trust outside of the financial world, right? So in the financial world, it's all about your credit score or the particular bits of documentation that you can produce, but that's not how we work in the real world. A lot of your friends, your closest, most trustworthy friends, you probably never scan their driving license or check their credit reference or done anything like that, but you will lend them money and you will help them out and you'll go on holiday with them and you'll share houses with them and you'll lend them all sorts of things, right? But that trust hasn't been built up through technical algorithms. That's just been built up through getting to know people. And I think trust based on reputation is actually a much more powerful thing than trust based on holding a particular identification document. And I think if we start looking at people in a wider context, and actually your trustworthiness is not just what you can rack up with a bank with and produce on the day, it's actually your connections, your knowledge and your education, your skills and your experience, and it's basically who you are and who you know. All of those kind of things wrap up in trust. And I think once we start looking at people beyond just a bank balance and a set of documents and actually really opening it up, that to me is a massive enabler for financial inclusion, because people either arriving in the UK or currently in the UK or in the developing world, they all have a lot more going for them than a credit score. They have all sorts of skills and all sorts of experience and connections. And if we can pull all those pockets of trust that they built up throughout their lives, basically their reputation, then I think that's going to be extremely powerful for financial inclusion.
Charlene, you obviously deal with consumers and individuals in sub-Saharan Africa where things like identity are not easily proven. People don't carry around passports, for example. What are the challenges that you've seen with BitPesa, and how do you kind of overcome this lack of traditional trust tools and trust documents to bring these people into the financial system?
Sure. Well, certainly we're facilitating payments, and we do require KYC. And it's true, very few people do carry their national IDs, although some African countries do require it by law. So we handle KYC a couple different ways. Actually, people who are purchasing Bitcoin from us in Africa are registered with their telecom. So we use, in some cases, the mobile operator as a proxy, because they actually do have to show their ID in order to register their SIM card, which is increasingly becoming required by telecom operators for fraud reasons. So I'd say, for us, we actually haven't experienced that much in terms of the KYC or know your customer requirements to be our customers. And then for people who are sending money to Africa, it's not as much of a problem.
All right, so Erica, a large proportion of the global population are only now discovering the internet through smartphones. So how does this change the way we need to think about the design of financial products, and what ramifications does that have for people who are not traditionally been in the finance system?
Well, I think there are kind of two sides to that. There's, like any sort of technology development in the emerging markets, they don't have legacy systems to deal with. They don't have assumptions. They don't have preconceived notions about what it needs or can be or should be. And so that gives you a lot of opportunity to really design something that specifically meets their requirements and their lifestyle and whatnot. And I think that going out, another way to think about it, I guess, is in terms of you don't really have typical segmentation anymore. It's kind of a segment of one, right? And there are plenty of people, or there's similar attributes of somebody who's using a phone in an emerging market for the first time and a grandmother sitting in the US or the UK who's using a phone for the first time. So it's, I think it's about understanding the user and taking that time to get to know them so you can make design priorities and design criteria that support that.
Yeah. Chris, I mean, you have that similar challenge, right? But if you're looking to build a challenger bank in the UK, there's obviously a large proportion of people who are not comfortable with smartphones yet or are not fully digitally enabled. So, I mean, how do you think, therefore, as a new bank about user acquisition when people don't traditionally use the channels that maybe your company is looking to go down?
Yeah, totally. So a lot of the banks focus on their app, and their app is like their shop front these days. It's the new bank branch, right? And they put everything into the app, and you're quite right. If you don't have a smartphone and you don't have a data contract, then you can't have an app. What we're doing in Secco is we're creating a bank-ready interface is via the channel you're most comfortable with. So what that means is that you don't have to go into your app to check your balance or make a payment or make a transfer or view your statement. You can use whichever channel is most comfortable for you. So you could use a text message or send an email or a Facebook instant message or a tweet or a WhatsApp message. Any channel you're most comfortable with, use that channel, and then the bank will translate that. So you can just text and say, have I been paid yet? And the bank will say, yeah, you have last Tuesday, and here's your balance, right? If text's your thing. If you're addicted to Snapchat, then Snapchat the bank and ask if I've been paid yet. And really, I don't think banks should be trying to get people to come out of the space they're most comfortable in to come and present them in their app, but actually should go out to wherever people are most used to transacting and interacting the way they're most used to be interacting. It seems like a bit of a no-brainer that banks should be doing that, and I don't really understand why the big banks don't seem to. Well, I do understand. It's because they want you to use their app, so they can sell you a mortgage while you're checking your balance. But yeah, that's my opinion.
Charlene, so whether it be immigration or even population displacement, cross-border payments are becoming increasingly necessary and important. And so what are the trends in kind of remittance technology that you guys are seeing, and how can the financial system open its doors to people who haven't previously participated?
I think the remittances market is an incredibly exciting one. I mean, different statistics show that the market is about $500 billion annually, but growing quickly to about $600 billion. BitPesa focuses mostly on sub-Saharan Africa, where the market's about $40 billion of that. So we have been excited to see quite a few innovations. I think you certainly see the telecom operators looking at mobile money as a way to facilitate remittances, because it's quite common that the recipient of the remittances doesn't have a bank account So particularly in a place like Kenya, which was mentioned earlier this morning, 80% of the adult population in Kenya has M-Pesa, which is essentially mobile money on a feature phone. So we're talking about phones that are just SMS empowered. So suddenly, someone could, through BitPesa, send money from anywhere in the world to a mobile money wallet in Africa. So I think certainly what BitPesa is doing to facilitate cross-border payments into Africa is an innovation, and we're using Bitcoin as a method of settlement. So I think other telecom operators are looking at interoperability. So I think that's not necessarily like a fun topic, but a really important one, because most people think about remittances as being, from the developed world into the developing market. But actually a lot of cross-border payments happen within emerging markets. So I don't know if you guys realize this, but Ghana and Nigeria are very, very close to each other in West Africa, but the average fee for sending money across that border is about 25%. So what people are doing is essentially stuffing cash in a brown envelope, putting it on a public transport, like a public van, and then just praying that it gets picked up on the other side. That's how cross-border payments happens today. So I think there's a lot of potential for mobile money, except that, we look at Kenya as a great example, but the truth is mobile money hasn't expanded that well in other developing countries. They say, I think GSMA says there's between 200 and 300 mobile money deployments globally, but very few of them have actually reached scale. So I'd say to summarize, there's a lot of potential around mobile money, which is proven by the case in Kenya, but it still hasn't scaled up that well. We certainly hope that digital currencies such as Bitcoin can be used to facilitate cross-border payments. And then I'd say lastly, an interesting innovation that I see is transfer of value. So actually the way mobile money in Kenya started was because people were transferring airtime as a method of value. So essentially I would go to a kiosk, I'd buy $10 worth of airtime, and then I would text message the voucher code to my cousin, and then they would essentially redeem that voucher for airtime, which is essentially money. And so now you're seeing all sorts of interesting companies that are doing like airtime top-ups or using apps so that you can like pay someone's utility bills. So you could pay school fees or electricity if they have electricity, et cetera. So I think remittances is evolving away, not just from, or not away from, but to include not only like money-to-money transfers, but airtime and other value.
I would actually further that, that in the emerging markets, a lot of new services are phone or SIM card driven. So there are examples in Southeast Asia of when you purchase a new SIM card, you actually get travel insurance with that SIM card, right? So examples of bundling technologies or services from different industries, and it's at that intersection of insurance and IoT, I guess in that case, where something interesting can really happen.
What then, Erica? I mean, if you think about Kenya, M-Pesa is a huge player there. What do we need to think about when we're thinking of financial inclusion about kind of the monopolistic issues that exist in places like Kenya, where there's one really dominant mobile payments player? How can the kind of FinTech community in these emerging markets make sure that everyone is given a fair go and everyone's given a competitive price, for example?
I mean, I can't speak to Kenya because I don't have a lot of experience, or any experience there, to be fair. I think I would say that in most emerging markets, in all markets, the relationship that you have with the regulators, the relationship that you have with the government, the relationship you have with the people that are dictating these dynamics can have a huge impact. And I think also getting sort of a critical mass around, or a major player. I mean, for example, in China, Tencent or somebody like that, right? I think it's the partnerships that you create that can enable those types of developments. Maybe you can speak specifically to Kenya.
Sure. Well, I'd say in general, and maybe this kind of touches on a question you might ask later. I mean, transaction costs. So you can look at it from a hardware standpoint and say, how can we encourage financial inclusion by making sure that, okay, do we design cheaper smartphones? And actually that is happening. So, there are many companies like Huawei, which are trying to basically offer the cheapest smartphones. And yes, I
Xiaomi
do.
as well.
Yeah, sure. So I think you could look at it from a hardware accessibility standpoint, but we still have to have overlaying, very interesting apps that are low cost. I mean, data is still pretty expensive. At least I'm speaking to Kenya and the markets where I've worked in Africa. So, there is a cost factor even once you have the hardware. Can you access this financial service which is powered by data? I mean, even Bitcoin requires data. Okay, even if I could access, get my credit scoring that gives me access to a microloan at an MFI, what is the microfinance institution charging me in terms of interest rates? So I think there's a lot of layers to it. There's accessibility in terms of the hardware, like do I have the actual physical assets to access finance? But then also the people who are providing the financial services need to structure the pricing in a way that is, inclusive.
There's also a certain responsibility that comes with being the owner of the value. So I guess in M-Pesa, with the mobile network operators, suddenly everybody's using airtime as if it were money, or using it as money, right? But what's to stop them suddenly upgrading network capacity and started just issuing lots of airtime and suddenly devaluing the investments people already have? It's quantitative easing for airtime, I suppose. And that certain responsibility comes, I guess, with whatever company is starting to issue e-money or monetary units for people to use. And it's that level of responsibility that needs needs a certain level of regulation and understanding that your investment in these particular assets are dependent on what society and the corporation that issued them, what value they put on these assets. And if suddenly, at the moment, airtime is scarce, right? So that's a good thing to trade on. But suddenly, the network capacity is doubled and everybody's using airtime like it was, like it was free, then suddenly everybody, if you've got lots of savings in airtime, if you've saved up 20,000 years worth of talk time, that's suddenly worth nothing. So it's people understanding that just because an organization is playing the role of a bank, it maybe doesn't have the same oversight that the bank does.
So we mentioned, there's obviously an underlying infrastructure that support these new apps that are coming into the fintech world. And if you take the example of micropayments, you could argue that when you're thinking about financial inclusion, that the existing financial system is almost broken. It cannot do micropayments to the level that maybe is needed to bring people into the financial system. Do you think that the existing architecture can be retrofitted, or is it going to have to be rebuilt by something completely new and completely, fit for purpose? So maybe I'll start with you, Charlene.
Sure. We look very closely at bank payments, and so when you talk about making cross-border payments, and so I should mention that BitPesa, although we originally set out to serve kind of diaspora making remittance payments to Africa, we also serve businesses. So we've also evolved to do B2B business payments. And what we're really competing against is a bank transfer. So an example would be we have clients who are Nigerian importers importing goods from China. They need to make a payment from Nigeria to China. They want instant settlement or very close to it because the goods won't ship from China unless the payment's received. And so when you're looking at, so this is more like a bulk payment, what we're competing against is bank transfers. But what are we competing against at the micropayment level? Like it's what I described earlier, where cash is stuffed in a brown envelope and driven across a border. I think certainly technology, so leapfrogging with mobile money, to go back to that, could be a solution for, not retrofitting, but actually leapfrogging so that it can facilitate micropayments. To send a payment like via M-Pesa is, something like 20 shillings or the equivalent of 20 cents. As a percentage point of that payment, which is only $2, it's still relatively a percentage that's not negligible to someone who makes $3 to $4 a day. So I do think that mobile payments can be a potential tool, for facilitating micropayments. Bitcoin certainly can also be facilitated. Like, if there were value of Bitcoin in Africa, someone could, instead of having BitPesa in the equation, which is essentially using Bitcoin as a settlement, so pounds to Bitcoin, Bitcoin to Nigerian Naira, if, Erica were here and sent Bitcoin, within seconds for 2 cents to someone in Nigeria, now that would be transformative. But the problem is today, there's nowhere for that Nigerian to spend his or her Bitcoin. So I think it's really exciting if there were some, I'm not saying it has to be Bitcoin, but if there were a global digital currency or something of value, like let's say like airtime, data, data were universally accepted as this byte of data is equal to this byte of data no matter where I am in the world, then we're talking about a global economy where micropayments can actually make sense. But as long as we're having to change in and out of different currencies, and I mean fiat currencies, but I also mean like currencies of value, something that's not, like I can't spend this in my, environment, then, So I'm just really saying it'd be nice if we could see more universal value transpiring or moving around the world.
It's almost like we're going back to the same problem that we used to have before currency existed, right? I need to figure out my chickens are worth so many cows and so many, so many haircuts and so many marriages. But if I can't use the marriage or the cow, then I'm out of luck.
I feel like I should defend the banking system's technology. Because everyone says, the banks can't handle micropayments. They totally can, right? So if you go, there's a newsagents across the street out there, and like a lot of small retailers, there'll be a little sign on the till that says card payments minimum spend £5, right? And we've seen it everywhere. And that's not a technical limitation, that's a commercial limitation. The business model for banks and the payment rails demands a fee. And if I spend 5p buying a sweet, it will cost a retailer 35p to process it. And that's the limitation that we have at the moment in our financial thing. It's a business model limitation. And I think, I originally started as a computer scientist. And for me, if you zoomed in on your average computer, you can't work out whether these bits and bytes are financial transactions or an email, right? You can send an email to somebody in Hong Kong for free. But you can't send a payment. It's all bits and bytes. It's all electronics, and that's because there's a historical fee structure. And I think if new banks can change the business model behind that, just like you can have a free email account with Hotmail or Yahoo or whoever, right? It's not free. It's just a different business model for how they monetize it. They use your data rather than charge you a subscription fee to use their email account. And I think if banks figure that one out and actually think the data in that transaction is probably worth more than the fees we're going to get from it. So maybe that's the way we can do micropayments.
Erica, you obviously consult now to both startups and I assume corporates as well. Yeah. I mean, what do you tell the kind of existing players who are trying to think about emerging markets about perhaps how they need to change their business model? How do you convince them that the value is there?
Well, I think what we're seeing, probably this morning, I wasn't here, you probably heard about the unbundling of financial services, and this is a very common theme recently. I think that, and it's a little bit related to your previous question around legacy systems, right? I think a lot of the incumbents, what they're spending their time doing is figuring out, I need to do transformative innovation. I need to upgrade I need to digitize my services, right? But at the same time, I need disruptive innovation at the same time. Can I do that within the construct or within the structure of my organization? Or do I need to create something outside and disrupt myself before somebody else does it? So it's not so much about emerging markets versus developed markets in that context, because I think basic human needs, user needs are fairly universal. It's just what technologies they have to enable that interaction. But in terms of, can you, within the same governance structure, actually create that kind of disruptive change? Most banks, most incumbents are realizing they can't. And so they're setting up separate organizations with different governance structures in order to facilitate that.
Right, I think we might open it up to questions to the audience. Does anyone have anything they're raring to ask on financial inclusion and FinTech?
Thank you, guys. Question is, what do you see as the role of blockchain in FinTech? It's something that we're hearing a lot these days. Are there any low-hanging fruit, something that we can actually commercialize in the next 1 or 2 years? If so, what would that be?
Okay, so I can talk about it.
Yeah.
Actually, I try not to talk about blockchain now at events because I guess it's one of those things that's become hyper-inflated. It's so overused as a term, and it should never have escaped the realms of computer science. It's so funny that you have boards of banks talking about this blockchain thing and what they're going to do with their blockchain strategy. It should never, it's a computer science algorithm that should have never have reached the levels it has done. I think it's the role of blockchain. It's gone through this kind of hype bubble, I suppose. We're going to end up with a normalization of blockchain and more blockchain as a platform type solutions, like with Microsoft at IBM integrating blockchain into their Bluemix or their Azure cloud platforms. People start calming down a bit about blockchain and working out what actual are killer apps on blockchain, things like managing of assets on blockchains. And I think this normalization process, it'll pop out the other end looking like, say, cloud computing did maybe 5 to 10 years ago. It'll be immensely impactful in the industry, and it'll enable all sorts of things which we hadn't imagined 10 years ago, but it's not going to solve world peace or kill cancer or any of the other things that people often state the blockchain is going to be doing.
I would take a different slant. Obviously, I'm biased.
Yeah.
I work for a Bitcoin company. I mean, I agree. I am interested in non-currency related blockchain applications. I think smart contracts, supply chain traceability on the blockchain are very interesting applications. Is there a killer app? I don't know. Maybe not a killer app from a consumer perspective, as I alluded to earlier. If we did a show of hands, like how many of you guys have a Bitcoin wallet on your phone? Okay, this is four people out of a room of maybe 100, and I can imagine you're some of the most well-educated people in the UK right now at this moment. So in a developing country context, I don't see anyone really using Bitcoin mainstream when you can use your contactless card. I get paid in Bitcoin, and I still spend everything through my HSBC account because it's convenient. But in the developing country context, as I alluded to earlier, I think there is an application there where people who don't have access to bank accounts, much less credit cards. I think the statistic is 3% of sub-Saharan Africans have credit cards. In a developing country context, I think that the consumer app could be potential. I think we're more likely to see with blockchain settlement. So if you guys have heard of R3, it's a consortium of many well-known banks, including Santander, I think Barclays, big banks, which are joining a consortium that is running a pilot to do settlement intra-bank. So think of it as a replacement for SWIFT. So I think if banks start using some sort of blockchain platform to do intra-bank settlement, then it would lower the cost and time of settlement, and God willing, they might actually pass that cost savings on to the consumer. Whether that will actually happen, I'm not sure. Is it just whitewashing and saying, yeah, we're hip with blockchain technology? I don't know, but we'll see.
Yeah, and there's some really awesome stuff happening also in the developing world around non-financial use of blockchain, around civil liberties and the sharing of information, decentralization of organizations. There's things like press agencies on blockchain where nobody's really hosting the articles, and therefore there's nowhere for the police of the country to rack up and arrest somebody. And it allows people to operate without, if you're in an environment where you are fearful of the authorities, you can operate.
Yeah, and I think Estonia is one of the first countries to both have your identity. You can apply for an identity on the blockchain. You can get married on the blockchain, and I think they're also doing voting. So this would be a very transparent way to run elections.
I think maybe one way to think about it, broad brushstroke, is at its best, it could basically, if you think of banks or large incumbents as the people who sell or deal in trust, it basically removes them as the sole, having the sole ability to share trust among people who don't know each other, which is an amazing thing that could manifest itself in countless ways. At the worst, it's going to make the back office more efficient. Right? Either way, it's going to be really beneficial, but it's
Not clear how.
not clear how yet. Yeah.
Cool, we have time for one more question.
Thank you. Around Bitcoin, Mike Hearn, the developer of Bitcoin, stated that Bitcoin is dead because of one line of code which allows not to scale it further on a global scale. Any comment on that?
I try not to, I mean, I appreciate the question, and it's a very good one. I try not to get too involved in the politics. For those of you guys who don't know, there's a bit of controversy in the Bitcoin world about whether the blockchain, as it is powered by Bitcoin, is scalable. I mean, I'd prefer not to share my own personal opinion. I think it's a lot of noise. I think we should be focusing our energy on finding like valuable applications that would warrant scalability. I think there's a lot of politics going on. So we at BitPesa just try to stay focused on adding value to our customers, and we are actually digital currency agnostic. So if there is a, you know, if Kanye coin suddenly becomes really scalable and hot, and that's a secure platform, then we'll migrate to Kanye coin.
You heard it here first.
Hi, this question is for Chris. Can you just shed more light on the work you guys are doing with regards to monetizing data? You said you could actually bank your data and actually make money out of it, and there was a reference you made about you know, every transaction is basically, even financial transactions, is actually data. You could. So, but how about privacy concerns? How does that work in your model?
Totally. So what we did an awful lot of research when we started Secco, and we realized for a lot of people, maybe some of the people in this room, your data is worth more than what you have in your bank account. Your data, for the average UK citizen, sort of middle class, middle income, your data is worth about £200 a year. And we thought actually that data is not working for us very well. We've basically splurged that data around the internet and been very naive with sharing our information. And now every single week we hear about somebody's database being hacked and cracked and lost and stolen. So we thought actually let's give people the ability to reclaim that data, to put that somewhere safe, i.e. a bank, and then be able to transact on that data. And how that means, how that actually works in real life, it's what we're giving everybody is their own bank account, their own vault. They put their data in there, and then people want access to that data. Mostly people doing marketing. So if you've put in your vault your preferences, parameters, and intentions, things like you want to, I don't know, have a skiing holiday this winter. If we have 10,000 people who have all stated the intention to take a skiing holiday, that is worth an awful lot of money to somebody who's doing a ski chalet hire in Switzerland. And they will buy that information, and they will buy it directly off the customer, rather than going the roundabout route they have to go at the moment, which is to go through the ad tech industry and buy lots of ad banner space all over the internet. And that's reached its end of life now with people doing ad blockers everywhere. So it's this kind of hit and miss, putting up ad banners all over the place and hope that somebody sees your skiing holiday banner. In our world, you can connect directly with the consumer, and you will pay them for their intention to look at your particular product and service. From a consumer point of view, all of your information starts earning value through that mechanism. So you'll have a slidey bar in our interface saying how much information do you want to share. If you share lots of information, you're going to earn lots of interest on how interesting you are. If you want to share no information, then that's fine as well. You can be totally private, but you won't earn any interest on your data either.
Right. Everyone, can you thank me or join me in thanking... And now a much bigger round of applause for Chris, Charlene, and Erica for giving up their time today.